Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies in regards to their latest news updates, as well as what top analysts are saying about this company to determine if we as investors think this company is still a good buying opportunity. We're also going to talk about Sofi Technologies, SOFI stock in this video, pertaining to their Q2 earnings projections to determine if we can actually make some money off of their Q2 report for a short-term play, or if this company is still a good long-term buying opportunity. So we will also consult top analysts and see what their opinions are for this particular stock as well. Now, I do want to say before we begin that we should take analysts' price predictions and price targets with a giant grain of salt, and I also want to say that we shouldn't overexpose ourselves to risky growth companies such as Palantir Technologies and Sofi Technologies, because that would be bad risk management. I personally do not allocate more than a 5% portfolio weight to any single risky growth company, because anything beyond that I deem as improper risk management. But with that being said, remember to go and smash that like button for more videos on Palantir Technologies and Sofi Technologies. Go and comment down below which company you like better between Palantir and Sofi Technologies. Subscribe if you are new, and without further ado, let's just jump right into today's stories. Right now, the PLTR stock is trading at around $10 per share, which is absolutely phenomenal because this price comes on the heels of a very good news update where the US Army Research Lab extends their artificial intelligence and machine learning contract with Palantir Technologies, which is worth $99.9 million over the next 2 years, which is absolutely fantastic. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. And the reason why these institutions and organizations decide to use Palantir Technologies is because Palantir can take large data sets and actually interpret this data so the leaders of these organizations or institutions can make proper data-driven decisions. We are also very bullish on Palantir right now because they recently announced an expansion with the US Army Research Laboratory to actually implement data and artificial intelligence and machine learning capabilities through Palantir Technologies software. So basically, they have obtained a contract that totals around $99.9 million over the next 2 years. So basically, it's around a $100 million contract, which is very impressive. It's so impressive, in fact, that the president of Palantir USG said, and I quote, "Maintaining a leading edge through technology is foundational to our mission and partnership with the Army Research Laboratory." He goes on to say, "Our nation's armed forces require best-in-class software to fulfill their missions today while rapidly iterating on the capabilities they will need for tomorrow's fight. We are honored to support this critical work by teaming up to deliver the most advanced operational AI capabilities available with dozens of commercial and public sector partners," end quote. So this is absolutely fantastic, and I really like how the president of Palantir USG actually had to say something about this contract, because I really like how the US Army and the US military in general really trusts Palantir Technologies because of how fantastic their software is, as well as how trustworthy the company is. The article goes on to say that Palantir's software platforms and technology will be continuously implemented to solve the DoD's most pressing problems. The senior vice president of Innovation Federal actually says this, and I quote, "We are looking forward to fielding our newest ML, edge, and space technologies alongside our US military partners." And of course, that would include Palantir. He goes on to say, "These technologies will enable operators in the field to leverage AI insights to make decisions across many fused domains, from outer space to the sea floor and everything in between," end quote. So honestly, this is a fantastic contract, which just further solidifies their already strong relationship with the United States military, and particularly the United States Army. In 2021, Palantir Technologies generated around $1.5 billion worth of revenue. So this contract, which is worth around $50 million per year for the next 2 years, is going to put Palantir on a trajectory to beat what Palantir brought in last year by a substantial margin. And I also like how this contract kind of eases Wall Street's expectations and worries about how Palantir Technologies is really dropping the ball when it comes to their government deals. The reason for this worry is because compared to their commercial segment, their government segment has not been doing as positively. However, I actually like Palantir Technologies' commercial segment better than their government segment, but it is really good to see Palantir continuously continuously landing deals with the United States government. So what do analysts think about this particular company? Well, according to analysts, a particular 5-star analyst says that Palantir Technologies is a strong buying opportunity, so he gives the company a price target of $20 per share. On the other hand, we have a Goldman Sachs analyst who has a neutral rating for the PLTR shares, and he has a price target or price prediction of $10, which they believe that Palantir Technologies can achieve over the next 12 months. Now, moving right along, other analysts actually tend to disagree with both of these analysts in some way. For instance, one analyst says that Palantir Technologies is perfectly positioned to benefit from any chaos throughout the entire world, and as the economy gets worse and as geopolitical tensions increase, Palantir Technologies can act as a stock portfolio stabilizer, because this is going to play into the hands of Palantir Technologies, because that's when their customers are the most reliant on them. However, the analyst does mention that it could also go the other way, where next-generation software companies such as Palantir Technologies could suffer in the current stock market environment and the current economic environment, because investors are actually prioritizing other stocks and companies right now besides growth and technology firms. And for this reason, the analyst says that he doesn't anticipate to see a reversal of this trend anytime soon, which means that Palantir's current growth trajectory is unsustainable in his view, considering the current stock market environment. The 5-star analyst goes on to say and add context to this by stating that although next-generation software vendors have enjoyed a stock price snapback more recently, we believe the market will remain highly speculative, focusing on the highest quality companies. He goes on to say, as such, we believe many next-generation software vendors will continue to struggle in this environment, especially those who are still trying to gain credibility with investors, end quote. And honestly, I do tend to agree with him. Because the current stock market environment is not friendly to growth and technology stocks, we could anticipate a major pullback in small cap and mid cap names, while investors decide to double down in defensive stocks or blue chip companies. The analyst also gives us some forecasts and projections regarding to what Palantir could bring in for their Q2 earnings report, which is set to take place on August 8th. He anticipates that their revenues for Q2 of 2022 will come in at around $459.4 million, which would represent a 22% increase year over year, while their earnings per share estimate, or EPS, is set to come in at around 1 cent per share. However, I want to add that this is actually below the current overall forecast and average forecast from Wall Street, who currently anticipates that the company is going to bring in around $470.9 million and an EPS of 3 cents per share, respectively. And this tells us that this particular analyst is not looking forward to their Q2 earnings report and how the PLTR stock could actually fall and not end up exceeding expectations of Wall Street, which is going to impact the PLTR stock very negatively. He also has an outlook projection for Q3 of 2022, where he says that the company is going to bring in around $480.1 million and an earnings per share of 2, while Wall Street, in comparison, thinks that the company in Q3 of 2022 is going to bring in around $507.1 million and an earnings per share of 5 cents. Due to the analyst not having positive forecasts for their revenues or earnings per share compared to the Wall Street consensus over Q2 and Q3, he has actually lowered his buy rating for Palantir Technologies down to a neutral rating, and he has actually taken back his $16 price target off the table, to where now he does not give a current price target. So we have some 5-star analysts who say that the company is a buy rating and it's worth $20 per share, and then we have other 5-star analysts that are actually taking back their price targets, and they rate the company as a hold for now, only due to the current stock market environment. Now, if you're like me, I invest into companies not based off of the current stock market environment, but rather based off of company fundamentals, so I would tend to agree with the other 5-star analyst that is honing in on that Palantir Technologies as a company is not changing, and that they are very solid, but the current stock market environment is changing, and although it's going to be rough for the year of 2022, they believe that 2024 onward could be very positive. Also, speaking about Q2 earnings reports, we have Sofi Technologies SOFI stock, which currently trades at $6.23. If you didn't know, Sofi Technologies is a fintech company where they operate as a digital bank by offering their customers an all-in-one inclusive app that gives them anything they could possibly need in terms of financial services and or financial products. This would include things such as home loans, personal loans, auto loans, student loan refinancing, credit cards, debit cards, checking accounts, savings accounts, and a lot more. They also offer a brokerage service where investors can buy and sell cryptocurrencies as well as stocks. The reason why we are talking about their Q2 earnings report again is because it is coming up on August 2nd, right after market closes. So let's see the expectations that Wall Street thinks that this company is going to bring in. Well, according to the Zacks consensus estimate for their revenues, it's supposed to come in at around $346 million, which would indicate a 49.6% increase year over year, which is absolutely fantastic. And I talk about this a lot. If you can find a company that is scaling their revenues from now to the next 5 years of over a 30% CAGR or even a 30% CAGR, that indicates that this company is rapidly expanding, and clearly Sofi Technologies is beating that particular estimate by bringing in almost a 50% increase. I also want to mention that we have seen strength in all three of their business segments, including their lending business, their financial services business, and their technology platform business. And because of this, Zacks also gives us a consensus estimate in regards to their earnings per share, or EPS, which is set to come in at a loss of 12 cents per share. And this is still an improvement from what the company brought in the first quarter of 2022, which was a loss of 14 cents per share. So clearly they are improving in that regard as well. However, overall, Zacks says that this company is a hold right now because they have their own proprietary metric rating system from a scale of 1 to 5, with 1 being a strong buy and 5 being a strong sell. So that means that 3 comes in as a hold rating until the stock market environment changes to where the company is going to massively benefit. And 2 benefits that we want to look forward to is, I think the student loan moratorium is going to be pushed until the first half of 2023, so we have an amazing catalyst that could take place in the beginning of 2023, and at the end of 2024, this company is set to become profitable. So those are 2 major catalysts that are going to take place in 2023 and 2024, and for the remainder of 2022, like we said earlier, we've seen strong business growth in their various segments, which would include their lending segment, their financial segment, and their services and technology platform. But what do analysts think about this particular company? Well, according to Piper Sandler, they have a $10 price target based off of their current research. And just like Piper Sandler, the Morgan Stanley analysts actually have a $10 price prediction for this company as well. However, on the other hand, other analysts actually anticipate that the future projection for Sofi Technologies SOFI stock is more accurately valued at a future 12-month price target of $13 per share, which means that investors, if you would decide to invest into the company right now, could double your money. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.